Good evening, my dear members. Welcome you all to the recent amendments on the GST law, including case laws and budget compliance 2026. I request CA Kavita Parmesh to escort today's speaker, CA Annapurna Kabra, onto the dais, please. And welcome her with the book. I request to say Kavita Parmesh to give a welcome address.
Good evening, everyone. Welcome to this study circle meeting on budget amendments, recent budget amendments under GST law and case laws also. I think GST has been, all of you will agree with me that GST has been one subject which is ever evolving. Every day there is some change. The view and interpretations what you take today may not stand good for next day itself. So that's the need why, if you see, there are so many sessions in a month on GST, but still we are somewhere there is some gap and something we miss out. So that's when we thought that anyway now we are approaching the year end. One is the budget, what are the changes which will have an implications, and at the same time what are the precautions which we'll have to take before closing the year so that we are compliant. I mean, our clients are compliant. The moment we are compliant, we have the knowledge, then our clients will automatically be compliant. And that's when we requested CA Annapurna Kabra. She happily agreed. I welcome you also to this study circle meeting. Thank you for being with us. And as far as the branch is concerned, we're having bank branch audit seminar on 27th of March this month. It's a full day seminar. The details are there which will be displayed, so please take the benefit of it. Again, we are keeping the audit and the new changes in all the norms, audit requirements. We have kept this seminar. Apart from that, we are also coming up with the April month. We are coming up, 1st April, we are having study circle meetings focused on year-end compliances. Because very important that we close the year correctly under all the statutes which are applicable for a business entity. Be it income tax, corporate law, FEMA, everything, all those will be covered. So it's a series which will go on for 3 to 4 weeks, so please take the benefit of it. And I hope today you will have a lot of learning, and happy Yugadi to all, one and all, and also Eid Mubarak to everyone. Good day.
Thank you, CA Kavita Parmesh. Now it's my pleasure to introduce today's speaker, CA Annapurna Kabra, to the gathering. CA Annapurna Kabra is a distinguished chartered accountant and a member of the Institute of Chartered Accountants with expertise in indirect taxation. She has further strengthened her professional credentials by completing visa and DIRM courses conducted by ICAI, a recognized authority in VAT and GST. She is a prolific writer and a contributor to leading professional journals, including ICAI Journal of Bangalore Branch, KSCAA Journal, and SIRC Journal as well. She has co-authored several authoritative publications on VAT and GST, including guides on VAT audit, VAT in Karnataka, GST, and inspection and arrest in the KSCA publications. She has also contributed to ICAI's background materials on indirect taxes and authored a technical guide on KVAT. Her academic and professional contributions extend to drafting and co-authoring key study materials on GST, transition and GST refunds, delivering e-lectures for ICAI's Indirect Tax Committee, serving as faculty for ICAI's GST certification course across India, developing study modules for Karnataka State GST officers, acting as a faculty at the Fiscal Policy Institute. Annapurna Kabra currently serves as the Vice Chairperson of the State Tax Committee of the FKCCI. She is widely respected for her engaging and insightful presentations on indirect taxation delivered to chartered accountants, tax professionals, professional associations, trade bodies, and department officers across various formats. So with this brief introduction, I present before you today's speaker, CA Annapurna Kabra. Over to you.
Good evening to all the members here. First of all, I thank Bangalore branch of SIRC of ICAI for giving me an opportunity to share few insights on the current topic, that is GST, with various combination of amendments, case laws, and to some extent some year-end compliances and some gestat procedures. And I congratulate Kavita for taking the charge of the chairman and being a woman. I think that's respect I would like to give to her. And very happy when a woman is taking chartered accountant position of the chairman of Bangalore branch. And special thanks to Shripal also for kind words and for a brief introduction. And I always believe in continuous learning. So I have come here not as a speaker but as a learner together with all of you, and try to share a few insights on the day-to-day what we are looking with the clients, officers and association, and working with this government, trying to give suggestions. So there is a lot of things which has taken place in the 25 and 26. I think this is the first time I am able to see when I took this topic as recent amendments, and last 2.5 months if you see the portal, you will not find any amendment of notifications, circulars or instruction. I think this is the first time which has happened. So I try to cover up more on the Finance Act 2025, which will definitely impact us, and Finance Bill 2026, and what is the impact of that, how we have to restructure with our clients. And a few discussion will be on some advisories, which are very important advisories. We are going to look into those compliances. So we'll be dealing some aspect of some important notifications, circulars, advisories, few case laws, very few procedures on gestat because it is in the pipeline. We all have to comply with these gestat procedures. And here in reconciliation, a few pointers which you have to comply by 31st March 2026. So this is the content of the GST session. And I think we have to deal with this for next 3 hours. And if any of the members have any specific issue or specific, you can try to raise up and let us have a more interactive and more learning together, right? So before going into this, I would like to highlight in brief, this material is little in detail because this can be used as a reference when you are going to read out these amendments, and definitely this material will be shared with all the members. So first, very important, before going into 2026, I thought very recent Finance Act 2025, which has been effective from 1st October 2025. What are the major amendments which has happened in this? So the first important is relating to this vouchers. I think most of you are aware or not, there was a department where they were trying to levy the taxes on vouchers. So this has gone to the Karnataka High Court, and later on they made an amendment by a council meeting saying that if the voucher is treated as a transaction in money, then there is no levy of GST. But if that is used as a measure of consideration, then there is a levy of GST. So I think they have tried to come out with that litigation, whatever was there for the vouchers, and they try to omit section 12(4) and 13(4) relating to the time of supply of vouchers. So I think this is one of the important amendment which few of the clients are using this vouchers, and I think they have made an amendment related to this vouchers. Next very important is plant and machinery. I think most of you are aware of this plant and machinery, or plant or machinery. Just imagine one word has lead that case into the Supreme Court. You know, earlier it was drafted as plant or machinery for the restriction of input tax credit. So it has gone to the Supreme Court treating the building as a plant, and input tax credit should be available. It was given based on Odisha High Court. Then it went up to the Supreme Court, and Supreme Court has also tried to affirm with this Odisha High Court, but simultaneously they made an amendment in the GST law itself, saying that it should not be read as plant or machinery, it should be read as plant and machinery. You got the point? So if I am reading separately plant or machinery, and it was analyzed that building can be taken as a plant and input tax relating to the construction of building can be available. So that was the analyzing. I think most of you are aware. Few of the entities have kept a credit in their electronic credit ledger. They have not utilized it. They said tomorrow if this Safari retreat case become favorable, then we can utilize this credit. Many of this construction industry have kept this credit in this electronic credit ledger. So based on that, GST law has amended retrospectively from 1/7/2017, saying that you cannot read that as a plant or machinery, it has to be read as plant and machinery. So accordingly, you cannot take the credit which is pertaining to this buildings or civil structures. Next, very important, I think most of us are aware of this credit note and debit notes, right? There is something called as a GST credit note. There is something called as a financial credit notes, right? So with relating to the GST credit note, what was happening was supplier was always issuing the GST credit note, and to that extent always the tax was getting reduced. But we were not having the control that whether our recipient was reversing the input tax credit or not, right? We are issuing the GST credit note and we are taking the reduction in our output tax. But there was no mechanism to identify that whether my recipient has reversed the input tax credit or not. So accordingly, they have made an amendment in the GST law itself that deduction from the output tax will be available only when the recipient is going to reverse the input tax credit. You are getting the point? How the department has outsourced everything to the taxpayer. If you want to take the credit, you have to check whether your supplier has paid the tax or not. If you want to take a deduction in your liability, you have to check whether your recipient has reversed the input tax credit or not. So in both the way, the taxpayer itself is responsible for maintaining that credit or reduction in the output tax liability. So this is one of the amendments which has happened in credit note, where you have to check that whenever any GST credit note is issued, simultaneously the recipient has reversed the credit or not. Now anyway, we are having this IMS mechanism, so that is helping us out, but for the earlier year, I think we have to check from the date it is effective whether the recipient has reversed the credit or not. To bring out that effective, they have brought an amendment in section 34 that is related to the credit note. Next is GST 2B. I think we all are well versed with that. They just made an amendment in section 38 itself, saying that this GST 2B is no more an auto-generated statement. Only once you accept, it will be getting linked. You all are aware how it works. We have IMS where it gives accept, reject or pending, right? So based on your manual actions, the 2B will be generated, right? So there is a combination of portal as well as a manual intervention. So there is an intervention of both manually as well as electronically. So I think something they try to bring out an amendment saying that GST 2B is no more an auto-generated statement. You have to intervene manually and has to, accordingly your 2B will be generated. So that was, they have brought out an amendment in this GST 2B. Now next is very important is relating to this pre-deposits. I think once the adjudicating order is passed, we have to file an appeal, right? Till this many days, we are paying pre-deposit only for taxes, right? If your order is having taxes, interest or penalty, we are always paying 10% pre-deposit as taxes, right? When we have to file an appeal before first appellate authority. But now they have made an amendment saying that if your order is penalty order, if it is a purely interest or penalty order, you are supposed to make a pre-deposit of 10% of penalties. So earlier we were, if you are having an order of tax, interest and penalty, then your pre-deposit will be only to the extent of 10% of taxes, right? But if you are having a purely penalty order, then in that case you are supposed to make a pre-deposit of 10% of penalties. So this is what an amendment has been made out in section 107 subsection 6 of the GST, right? Hope I am clear. Next, further, when after this first appellate order, we have to make additionally pre-deposit of 10% to GST, right? Tribunal, that is appellate tribunal. Now most of the things what is happening is we all are believing that still there is a time to file the appeal for GST. Anyway, as on date, the date is 30th June 2026. So still we have the time, we can make pre-deposit later. No. Once your first appeal order is passed, you see that within 3 months you are making an additional pre-deposit of 10%. Even though you are not filing an appeal immediately. But please see that you are supposed to file a 10% pre-deposit immediately if you want to file an appeal before GST, otherwise it will lead into a bank attachment. There is a specific circular for that, so you have to look into that, and it's very clear that you have to make an additional 10% pre-deposit. Now I am just asking a question to you. My first appellate order has been passed with 50 lakhs. The demand was 1 crore, they gave the favorable order for 50 lakhs, balance 50 lakhs is unfavorable. Got it? How much I paid when I made an appeal before first appellate authority? 10% of 1 crore. How much it was? 10 lakhs. Now how much is favorable? 50 lakhs is favorable, 50 lakhs is unfavorable. Should I make additionally 10% pre-deposit before gestant? Are you getting the point?
Yes.
Yes or no?
No.
No? You got the point? Just simple. 1 crore. I already paid 10 lakhs before the first applied property. 50 lakhs is favorable, 50 lakhs is not favorable. So when I am going to file a gestant appeal, should I make another 10% of 50 lakhs is 5 lakhs should I make or should I not make? There is a issue in this section 112 where they have used the word in addition to. In addition to pre-deposit made before first applied property. So when they have used that word in addition to, I think one reading is that you also have to make additionally 5 lakhs. But if you really, if the amount is huge, you can try to give a reason why you are not able, because already that amount is deposited. So ultimately you have to see that whatever you are disputing, 20% of that is already taken as a pre-deposit. There is an issue with this. Suggestion has been made to the government that remove that word in addition to. Ultimately, if it is resulting into 20% of 150 lakhs is how much? 10 lakhs. So already 10 lakh pre-deposit is made with the government. So they have to make a changes in that section. But as on date, it is talking in addition to the pre-deposit which is made before first applied property. So I would like to bring to the notice of the members. Next, very interesting, something is there in the pipeline. I don't know how many of you would have practiced in VAT regime. There was a special measure for the sensitive goods, right? Like plywood, iron ore, steel. There was always a special control they were having. So similarly, they want to bring out in the GST law also. It is yet to be notified. They are bringing out track and trace system. What it is called? Track and trace system introduced only for certain goods. So the department is going to check from which place to which place the goods are going, what is the quantity of goods going, and they are going to have an emblem, separate unique identification number for that. They are going to have a track number for that, and accordingly they are going to visible those transactions. And if you are not complying with this, all this what they call it as digital stamping or mark, you are liable for penalty up to 1 lakh. Right? So there is a levy of penalty if you are not complying with this. So still they have to notify as on date, but there is something they are trying to bring out as track and trace system. Right? This will be coming out with section 148A. We have to wait and see how they are going to bring out. But I just want to like to bring out with the reference of members. Next is penalty. I already told you 10% of tax or 1 lakh, whichever is higher. Next is if there is a supply of goods in SEZ before export to DDA or DDA clearance, it is treated either neither supply of goods or services, and accordingly there is no levy of GST. Right? So I think these were the amendments which are effective from 1/10/2025 based on Finance Bill 2025. Right? Next, Finance Bill 2026. There are certain, it's not yet passed, the bill is not yet passed, it is still has to be enacted. But would like to understand that how you have to work on these amendments. First, very important is Section 15 amendments. What is that Section 15 amendment? It is relating to a discount. I think most of the litigations today we are having in relation to a discount. So what the government has tried to bring out is, I'll just try to give a background for this amendment. In Section 15, there is a deduction for a discount, right? There is a kind, if you are giving a discount at the time of supply, you can reduce the discount. But if you want to give the discount post to the supply of goods, there should be an agreement with the recipient, and the recipient has to reverse the input tax credit. Now the dispute is there from last 8 years. How are you going to decide the agreement with your recipient? Can oral agreement will suffice? Can written agreement will suffice? Whether email will suffice? What kind of agreement should be there between the supplier and the recipient to say that they can take a deduction for discount? So this was a litigation from last 5 to 6 years. Then government said, okay, let us make an amendment to this section, and they brought this amendment saying that, just read out, this is very, very important. I think most of our discount cases we can refer this. After the supply has been effected, see, just let us read that. They have brought an amendment saying that after the supply has been effected, if for such discount a credit note has been issued by the supplier, and input tax credit attributable to such discount is reversed by the recipient, then the discount deduction can be given. You are able to get this? So if there is no requirement of specific agreement to the recipient, all that is not a requirement. Subject to that, it has to be notified. But this is a requirement. I think it will reduce lot of litigation. Wherever you want to give a discount benefit, please issue the GST credit note. Recipient will reverse the input tax credit. Case is clear. Earlier, it was not happening. That's why they brought after the supply has been effected. I think this is very important. Earlier, it was either at the time of supply or before the time of supply. But now they brought an amendment saying that after the supply has been effected. So this will definitely help out for all this quantity discount, whatever we are giving the discounts today to all the dealers. I think this amendment will definitely help out. And they also brought an amendment to credit note also, right? So whatever the agreements you are having today, I think especially the taxpayers whom we are dealing, if they are either the manufacturers or franchisee holder or dealers, please relook into those agreements, because this amendment is soon going to get notified, and accordingly your arrangements, especially this motor vehicle dealers, I think if you can just see this food products manufacturer, basically FMCG products, if you can just see those agreements, I think you have to rework on those agreements and accordingly try to reframe those agreements based on this amendment which is going to take place relating to this discounts. Very, very important amendment actually. Right? Next is they have made an amendment in section 34. They have to make an amendment in credit note also saying that simultaneously the credit note should be issued for the discount and the recipient has to reverse the input tax credit. So it is definitely going to reduce all your conflicts whatever you have with the manufacturers or dealers. Right? Anybody has anything here?
Credit note is issued, but it is without reversing the.
Can you just give the mic if you don't mind?
Ma'am, if the GST is, if the credit note is issued, but the tax is not present in the credit note.
It is a financial credit note.
Yeah, it is a financial credit. In that case,
there's a circular. I'll just touch upon your situations where your credit note is not having an impact of taxes. There's a specific 251 circular. I'll just deal with. There are various scenarios where they are given, where there is a levy and where there is not levy. Definitely.
So that discount will that also be available to the recipients?
No, I'll just tell you, wherever your credit, see there are two types of credit note. One is GST credit note and one more is financial credit note. In case of GST credit note, we are going to give the impact of GST. So we are going to reduce our GST, ultimately the recipient has to reverse the input tax credit. But in case of credit note where there is no GST impact as such, you have not reduced the GST. So ultimately you have paid the full taxes. So accordingly the recipient is also going to enjoy the full credit. Yes. Next we have an important amendment with relation to 54. I think most of you are aware that we have two types of refunds basically. One is export related refund, one more is inverted duty related, right? Majorly there was a section where they said that relating to exports you can take the benefit of refund, 90% will be given immediately and 10% will be given after verification of all documents. That was there only for exports. Now they brought an amendment saying that this provisional refund can also be obtained by IDS. What is that IDS? Inverted duty structure where your rate of inputs are higher than rate of your tax on your outputs, right? So in those cases also the government said no, the working capital is also affecting for this IDS refund. So they incorporated in this section 54, they made an amendment that provisional refund is not only there for exporters, provisional refund can be brought out even to this IDS, that is a dealer who is claiming the refund of inverted duty structure. So earlier from October there was instruction 6 where they said that okay, till the section is amended, let them give this 90% provisional refund, but as on date we have to wait and see whether this section 54 is going to get enacted. Accordingly 90% refund is eligible. As on date also you can claim that 90% refund based on instruction 6/2025. So whenever you are applying for IDS refund, check that 90% you are going to get this Subject to that, it is a low risk and you don't have more litigations and more low compliance rating. Accordingly, they are going to check into that and they are going to grant this 90% refund for IDs. Yes? Generally, we are able to see that they are granting the refund, but 90% is immediate refund which you can claim based on this amendment in section 54. Next is, there is a section 54 subsection 14 where they said that if your refund is less than 1000, if your transaction anywhere you are getting 1000 less than 1000, you cannot claim the refund. Because of this, it was happening that many of the industries, they were having certain refunds less than 1000. Certain transactions where the tax was less than 1000. So they were losing lot of credit, a lot of refund because of this amendment. So now they brought out an amendment saying that in case if you are exporting with payment of taxes and if it is less than 1000, still you can claim that refund. Other than the export with payment of taxes, this 1000 restriction is applicable, right? So I think this 1000 restriction is not applicable because this was creating a practical problem whoever were exporting with payment of taxes. So accordingly, they removed that 1000 restriction for those exporters. Right? Next, we have something called as Appellate Tribunal, that is National Appellate Tribunal. This is not relating to just at what we are talking. This is relating to an advance ruling. If Karnataka has given one advance ruling on the same facts and if the Maharashtra has given a different advance ruling on the same facts, they have the right to go to the National Advance Ruling Authority, National Authority. But till now, this tribunal is not yet constituted, right? If there are two conflicting advance rulings by different states, there was no bench where you were able to take this to a higher authority. So every time what was happening, it was going to AAAR, from AAAR it was going to High Court, and High Court it was going to Supreme Court. So there was no such bench which was constituted till date. So I think in this Finance Bill 2026, they have added this 101A amendment and they have tried to say that it can be just a tribunal or any other income tax tribunal that can be constituted as appellate tribunal for advance ruling authority, right? So this is something they are trying to, I think this might be notified from 1st April 2026. Only that's what I am able to see. We have to wait and see when they are going to notify these authorities. Next is most important amendment, intermediary. I think from last 8 years, I was able to read most of the case laws. Many, even the erstwhile also, always litigations between whether it is a intermediary services or export of services or import of services. I think this was the litigations we had in the various cases. What is, they are specifically, there's a definition of intermediary. And the place of supply for intermediary is the place where he is situated, like location of supply, right? It is very clear. I'll just give an example. For example, I am the holding company in India, right? My intermediary is located in India. My recipient is located outside India. Are you able to get? I have appointed the intermediary. My recipient is located outside India. What is the place of supply for intermediary? Is location of supply. So if it is located in, say, Maharashtra, intermediary is located in Maharashtra, I am located in Karnataka and my subsidiary company is located outside India. What was happening? What is the location of supply? What is the place of intermediary? Maharashtra. Where he is situated, that place itself becomes the place of supply for intermediary. So every time, even though my transaction was with a foreign company or Indian company, it was always where the intermediary is situated, accordingly the tax was levied. In case my intermediary is located outside India, just an example. My intermediary is located in Australia. I am located in India. My subsidiary company is also located in India. If I am importing the services, what is the place of supply for intermediary? What is the place of supply? Outside India. So I was not paying the taxes on import of services. Why? Because the place of supply for intermediary was outside India. So ultimately what we were doing, we were paying the taxes on intermediary whenever they were in India. If the intermediary was located outside India and if it was constituting as import of services, we were not paying it because place of supply for intermediary was outside India. Right? You are getting the point. So this was the many of our agreements, many of the challenges are today based on this place of supply for intermediary. There is a decision, I think if you can read this, Dharmendra Jani decision, Mumbai High Court, where they have tried to constitutionally analyze the place of supply for this intermediary, and I think there were a lot of issues were going on with this intermediary. From last 8 years, after analyzing all that constitutionality, they said, okay, let us bring out an amendment in the place of supply for intermediary itself. Now what is the change? What is the amendment they are trying to notify? Place of supply for intermediary. They said it is based on the location of the recipient. Earlier what was it is? Location of intermediary, right? Location of intermediary. But now it is not, it is the location of the recipient. So it will go with the residual rule and not with the place of supply of intermediary. So they brought into this residual rule. So all your import agreements, whoever is handling an export agreement, please relook into this, because many of your intermediary can convert into export of services, and many of your import of services where you were not paying the taxes can lead into a import of services. Why? Because of place of supply is recipient based services. So if I am located in India, my intermediary is outside India, and if I am availing the services from intermediary, it can lead into a import of services. So restructure your agreement, rework on those agreements, especially in relation to intermediary. I think from first, once it is enacted, I think you have to start working on that, but please try to look into those restructuring of place of supply, because definitely it will have an impact on your GST taxes with respect to the transactions wherever there is a intermediary transactions. So as on date, I would like to add here, as on date, post-sale discount is yet to be notified, credit note relating to amendment yet to be notified, refund related yet to be notified. Appellate mechanism, they are saying that is relating to national mechanism that might be effective from 1st April 2026. And place of supply for intermediary date is yet to be notified. So this is the position. I was just checking even before coming here. There is something which has been enacted, but nothing has been enacted. So as on date, it is yet to be notified. So these are the amendments which has taken place in Finance Bill 2026 from the perspective of GST law. So majorly on discounts, credit notes, refund, appellate mechanism and intermediary place of supply. Anybody has anything here to share? You are saying something? You want to say something? Yes. Next is majorly this insurance services. I think whatever insurance services we were availing, we were paying the taxes. Though it was our individual insurance or family related insurance, we were paying the GST on the premium. So from October 2025, I think they have made an amendment saying that whatever the GST you are paying on those premium relating to your insurance services as an individual or families, there is no, or relating to this reinsurance, there is an exemption from the payment of GST. I think to that extent we all are saved from this GST, because it was basically majorly we were not getting the credit, but simultaneously we were paying the GST on this cost. So I think this is one of the welcome amendment which has taken place from October 2025. And next is Goods Transport Agency Services, where there was a confusion with regarding to this Goods Transport Agency. Already GTA itself is a confusion. In that they added one more confusion here. Now what is that confusion? What is the basic definition of GTA? GTA means any person who provides the service in relation to a transport of goods by road and issues a consignment note, right? This is what we all know the definition of GTA. Now what they are trying to exclude it from GTA. What is excluded? All these local delivery services, whichever is provided by an electronic commerce operator, by whom the services of local delivery are provided. So there was a confusion whether these CP services, big basket services or these porter services, can it be called as a GT services? So this was an open idea by the department, and accordingly they brought an amendment saying that no, these all services are excluded from the definition of GTA. So accordingly there is a specific definition of local delivery, electronic commerce operator services, local delivery services. So accordingly this will not fit into GTA services. I think this we can have it. Whatever the services, they try to exclude the two types of services from GTA. One is electronic commerce operator by whom the services of local delivery are provided, or electronic commerce operator through whom the services of local delivery are provided. So I think we all are well versed. Day to day we are dealing with this kind of deals. So basically they are not fitting into GT. Right? Next is this provisional refund I was talking before some time, right? 90% refund you can claim it. But it is not applicable for these kind of products. That is areca nuts, pan masala, tobacco, essential oil. For all these products you cannot go for provisional refund. Right? And next is, if you have to go for provisional refund, one more very important condition is that if you don't go for your other authentications, you are still not eligible for provisional refund. So you have to update your bank details and you have to authenticate your Aadhaar, then I think you can apply for provisional refund. These are the two preconditions which has to be fulfilled before going into this provisional refund. So please check this kind of essential oils, tobacco, pan masala, areca nuts, this kind of goods are not fitting into the this refund of provisional refunds. Next is something they wanted to bring out fast. What is that? I think you would have seen in the media, you can take registration within 3 days. Yes? It is something they want to bring out that yes, you will get a registration. I think you would have well versed with this. Last 8 years I am able to see that registration has become a task. Yes or no? Multiple notices with multiple requirement of documents. If you give lease deed, they say it is not signed, first page is signed, second page is. With the basic reasons they are trying to reject your registrations. Yes. So there was already a circular where they have said that basic procedures you should not reject the registration. But there was lot of issues going on with this registration procedure. So they said, okay, let us, whoever is a dealer, small dealers, whose liability is less than 2,50,000, taxes are less than 2,50,000, they can apply for this immediate registration where you can get a registration within 3 days. But the condition is that your liability should not exceed 2,50,000 taxes per month. If it is more than that, you cannot apply for this. So there is the same procedures which is given in Rule 9A and Rule 14A. You can apply, you will get a registration within 3 days, right? So if you fulfill all those conditions and you have to say that you want to apply under 9A and you want to apply under Rule 14A, you have to select that drop down. So once you select the drop down of Rule 14A or Rule 9A, you can get the registration within 3 days. So I think you can assist your clients, whoever wants to apply immediate registrations, you will get a registration within 3 days, and there is an advisory which is already issued with all the procedures, how to withdraw, how to apply, all that procedures are given. That advisory is issued on 1st November 2025. Right? So you can refer this, and this is optional. This is not mandatory. You can go for regular registration also. You can go with that regular registration, or if you want, you can apply under 9 also, because this is an optional and it is not mandatory that you have to apply under this portal only. Right? So this is effective from 1st November 2025. Wherever you find that taxpayer is genuine and everything is fine, you can try with this. Wherever you think that tax liability is below 2,50,000, you can try to make a option. So totally, what is the eligibility is, your output tax liability including CGST, SGST, IGST should not exceed 2,50,000, and you have to go for mandatory authentications. And very important condition is that if you have applied in one place, you cannot again go. For example, for Bangalore place, already have applied for this. Again, you cannot apply for Hubli. Like if you want to open a branch, you cannot apply under this rule. So they are very specific that once registration is obtained under one PAN in one state, you cannot go for this optional registration again for one more place of business. So that is also one more very important. If you are registered under 14A, they cannot obtain another registration in the same state. So this is precondition. Be careful whenever you are going with this, and you will get a registration within 3 working days.
If you want to participate in exhibitions or something like that, can you take advantage of this, or
No, you have to go for casual registration. Yeah, this is not applicable for casual. Wherever you are going for exhibitions and all, you have to take a casual registration which is given for 90 days. Here, within 3 working days, you will get a registration immediately. Yes?
Can I take the registration in another state? In Karnataka, I can.
Yeah, you can go. Yeah, you can go. That is fine. Within same state, they are putting a restriction. Right? Next is anything relating to registration, everybody has. And once you have crossed this 2,50,000, there is a form for withdrawing from that registration. You can withdraw from that registration and go for regular registrations. Your input tax credit will not be affected, only there is a change in the procedure. So if your tax liability is exceeding 2,50,000, you have to go for your, there's a withdrawal form also in this advisory. Please follow that withdrawal and accordingly you can go for your regular registrations.
There is one more thing in that particular section, what they'll be giving the registration within 3 days. But there is one more condition that the officer has to satisfy with the documents.
That is always there, sir.
Again, we have to go to the department and
No, generally if your documents are advocate, whatever you have filed, they should not do it. But if they find that the documents are not advocate, it is having some non-compliances, not with the basic things, but majorly they will see. They are going to look into the macro changes. But if you see the regular registrations, they are coming out with micro changes also. So majorly in this case, they are very specific that they are going to look into this macro things. Majorly if it is complete, they are going to do the registration within 3 days. And one more condition is that if your registration was cancelled by the department, right? They have cancelled the registration and now you want to apply, you cannot apply. This is not permissible for them. This is only permissible for the taxpayers who are newly registered. If your already registration is cancelled 2 years back, 3 years back, now again you want to apply, then you cannot apply under this rule, right? You cannot say that, okay, I will go with this registration approval. There is a specific condition that you cannot apply under this new registration. Only for fresh or new registration, you can go under this registration.
the officer can cancel the registration if he is not satisfied with the documents.
He will see where is the registration. Once registration is not given, cancellation. What he can do is he will not accept. He will deny it. That's what. So again, you have to make an application.
Okay. What about things which were transactions happened in between the things? Because I have bought the registration of 15 days, but it will take the 30 days time to be there, no, for the in between the transactions will happen. We take the import and what happened.
There is a specific invoice, revised invoice. It is called as revised invoice. So within 30 days, within the time period, whatever transactions you have taken, to that extent your input tax credit is eligible. Your taxes you can collect it and pay it, right? And relating to input tax credit, there is a section 18 where they said that when you have applied for registration, on that date whatever credit you are having, even that credit also can be availed during that period. So you can refer section 18 and rule 46 for taking this credit and paying the taxes.
Now, normal registration is rejected. Can we go for this?
What is the reason for rejecting normal registration? You have to check whether it is registered under, cancelled under 29. Just check that number. If it is cancelled under section 29, then you may not go. But if it is other than section 29, you can still go for this. Next. This is a last notification in 2025 where they have come out with a specific retail sale price. I think this mechanism was not there for any product, but they brought some kind of product. I think you all are aware from 1st February they have removed that cess and tobacco and all. They try to remove that compensation cess and try to add the GST rate. So they are trying to bring out how the retail sale price calculation should be made for the purpose of GST. So I just explain you. I think whoever are handling this pan masala case or tobacco case, cigar case or cigarette case, there is a mechanism where they have tried to bring out a rule 31D. They have incorporated new rule 31D. There is a specific valuation mechanism by way of notification 20/25 and 19/25 is notifying what are the products which will come under retail sale price mechanisms, right? So I think these are the two notifications. Now I'll come to the example how to disclose in your GST. I think this is what the mistakes. When I was talking to one of the tobacco clients, I think this example has helped me out. So I thought I'll just share it with you. It is there in the advisory and notification. Basically, for example, if your tobacco is say 100 rupees per pack, you are having 1000, so it is amounting to 1 lakh rupees, right? When you are going to do a calculation, what is the rate on this? 40% on this tobacco product, right? So on this 1 lakh, I have to calculate the inclusive method. I think most of you are aware MRP how we calculate inclusive method. So similarly for this retail sale price mechanism, we have to calculate reverse price. So 1 lakh into 40 divided by 140. So how much is the amount? 28,571, right? But I want to give the discount to my customer. So ultimately what I am receiving from the customer? What I am receiving? 1 lakh was the price, right? 20,000 I want to give a discount to my customer. So ultimately what will happen? Out of this 1 lakh, it will get reduced with these taxes and I will say it is not 60, it is 80,000. Just excuse me this. After discount it is 60,000, before that it is 80,000. What I am supposed to do is my sale price is 80, my discount is 20,000, so ultimately my Net sale value is 60,000 what I am going to receive from the customer. And what is the tax I have calculated? When I am going to calculate the taxes, I have to calculate on the whole amount, that is MRP pricing taxes. Are you able to get? So what is the tax I am calculating here? 28,571. So ultimately what will be my invoice value? 60,000 plus 28,571. So ultimately how much I have to show in my invoice? 88,571. So don't do this inclusive method on 80,000 or 60,000. It has to be done on MRP pricing. So it will be 1 lakh into 40 divided by 140. Please follow this. For the purpose of taxes, I have to refer retail sale price. For the purpose of invoice value, I have to refer this. I have just shown it, how to show it in the e-way bill, because many times department will hold because of non-declaration in your e-invoice or e-way bill or return, how to show it. So I have just made an example for your reference. In your e-way bill, you have to show what is 60,000 and what is the tax. You have to show 28,571. So total invoice value you have to show 88,571, which will match with your invoices. In your return also try to show the same amount, 60,000, 28,571 and 88. Don't try to show 1 lakh here. Am I clear? Only for the purpose of calculation I have to take 1 lakh, but for the disclosure purpose I have to take 60,000 plus 28,571. Hope I am clear? Right? So these are the certain important notifications which I thought I can share with you. The next few circulars for our reference. Many times we receive the notices from the departments, but we forget to look into this DIN number. I think most of your document identification number. But now they are just trying to bring out that if your document is having either DIN number or RFN number, that will suffice. It is not mandatory that always it should have a DIN number, because once the document is uploaded in the portal and you will get a reference number, that reference number will be treated like a DIN number only, right? Basically this document identification number is there only for central law department. State doesn't have any circular or notification for this document identification number. I remember there was one High Court judgment where they said that it is not having DIN, so it is invalid notice. No, not required for state. There is no specific circular or notification that there should be DIN for state document. It is mandatory only for central document. But wherever the document is having either DIN or RFN, then it is a valid document. So earlier it was a DIN, but they said it is not mandatory for portal communication, especially when the document is uploaded in the portal, right? DIN is not mandatory. If you will get a RFN number, because always there was a confusion whether I should rely on RFN number or I should rely on DIN number. So they issued this circular stating that either of one will suffice. Now I will come to this discount. This is one of the most important circular which the industry was awaiting, and this was issued in August 2025. So most of the time it was pending before the first update already, or it was pending before the courts relating to this discount. There were 3 circulars which has come on this. One is 92/18, then 105/18, and then 251/2025. 92/18 is still retained. 105 circular is withdrawn. So 92 is there, and today we have the circular 251/2025. Please refer this circular whenever you are trying to look into the impact of GST on discounts. So you have to refer either 92 or plus you also have to refer 251/25. Sir was asking me this question, madam, when the financial credit note is issued, whether the recipient has to reverse the input tax credit. I think some sir was asking. There is a very clarity in the first scenario where they have said ITC reversal when commercial credit note is issued for discount payment. Very clearly the circular has clarified saying that no reversal is required since financial credit note doesn't affect any supplier tax liability. I think this will answer your question, right sir? Now next is, this is most important. If post sales discount by manufacturers to dealer a consideration for inducement service. A simple example, I am dealing in say food products, right? My manufacturer has sold the goods to me. I am going to sell the goods to my customers, right? Ultimately, I retain the title when the goods are sold to me. And when I am going to sell my customer, I will decide my price and I am going to sell the customers. So there is no interaction between manufacturer, customer and dealer. It is principal to principal, manufacturer to principal and principal to customer. But if the manufacturer is involved in contact with the customer, saying that this, for example, same company, anyway now it is exempted, or some food product, food masala item. This product is available at 200 rupees per day, per product. Manufacturer will tell customer, or they will enter into an agreement with the customer, or they will induce the dealer, saying that no, you sell this product at 180 rupees, 20 rupees I will reimburse you. You got the point? The customer is directly entering with the manufacturer saying that I want this product at 180, not 200. So, manufacturer will induce a dealer, sell this product at 180, I will reimburse you 20 rupees. In that case, when there is an induce to sell the product for a consideration, that will be liable for GST. Are you getting? But if there is no induce from the manufacturer, there is no agreement between manufacturer and customer. Independently, manufacturer is handling the dealer, dealer is independently handling with the customer. In that scenario, there is no concept of discount, and accordingly, there is no levy of GST on that discounts. You are getting it? He has paid already the tax on 200 rupees. 20 rupees is reimbursed me by way of financial credit now. So no impact. Already he paid on 200 taxes, I have availed the credit on 200. But if he has paid only taxes on 180 and 20 rupees has passed through this deduction, then to that extent there is a levy of taxes. That's what they have brought out in second scenario, saying that if there is no direct agreement between manufacturer and customer, there is no consideration, no levy of GST. But if there is an agreement between manufacturer and customer, there is a inducement of supply, and accordingly it will lead into a consideration, there is a levy of GST. Look into this. I think this is the most important whenever you have to look into those agreements with the manufacturer and with the customers. Again, there will be dispute in this circular also. How you take this as an agreement? Whether oral agreement, express agreement, I think again it is subject to litigations. Next. Now this manufacturer want to promote that spice. So he will enter into a agreement with the dealer saying that I will pay you extra 20 rupees or 25 rupees if you are going to promote my product. You are able to get, my product is 200 rupees, I am going to pay you extra of 20 rupees or whatever it is by way of discount, saying that okay, you will get a benefit if you are going to promote my product. If that kind of agreement is there, then that activity will be liable for GST. It is not a discount, it is an amount towards promoting that brand or promoting that product. That will be leviable to GST. But independently I am selling that product, independently I am branding that product, independently I am promoting that product without the agreement with the manufacturer, then it is not treated as consideration, and accordingly there is no levy of GST. That's what I have written here. Promotional activities by the dealer on receiving discount are to be increase dealer's own business, not linked to independent service to a manufacturer, right? But if there is a agreement with the manufacturer that yes, I am going to promote your product, I am going to campaign your product, for that if I am going to receive the consideration, then I am liable for GST. I have tried to give in brief on the circular. I request members to go in depth of the circular and try to connect with the fact of the case accordingly, right?
Some of the manufacturers, they fix some targets to the dealers. If they achieve that targets, they will give some discounts or something.
Correct.
How it figures?
How they are giving the discounts? Are they giving in the form of financial credit note or commercial credit note? GST credit notes. That's why they brought this. Because that's why they brought this. If you are giving through financial credit note, already government has got 200 rupees, they are not worried of it. But if you are giving with this GST credit note, this quantity discount or whatever you are giving, to that extent he has to reverse the.
They reduce the prices.
Yes. So ultimately you have to see whether he has suffered the taxes on the whole amount or reduced amount. Only where there is a reduced amount, they are liable for.
In that credit note, they can take the credit of the.
Yes. Anybody else? Yes. I think this is a practical scenario which is there from last 8 years.
Yes.
Last year there was a circular also. Wherever the amount was exceeding 5 lakhs, you have to take a certificate from the chartered accountant saying that he has removed the input tax credit. Now they removed that circular. Why this was required was, though the discount was given, the recipient was not reversing the input tax credit. You have to check what kind of credit note he is giving, right? Whether he is giving a GST credit note or financial credit note. To the extent of financial credit note, you can take the benefit of this circular. To the extent of GST credit note, I think you have to look into those reversal of ITs.
It is just a credit note now, like
Whether they have just checked in that credit note whether GST component is there or not. If it is not there, treat it as a commercial credit.
Though it is mentioning quantity discount.
Whatever, irrespective of that. They can write anything in that. As long as it is not impacting the GST, I think you can apply this first scenario and accordingly take the benefit of it. Yes, I think here also same thing about it. This is what the circular I was talking, this 2/1/2024, which they have made for discount, that they have to take a CA certificate above 5 lakhs, all that they brought it. Now recently they have withdrawn for this discount, because what was happening was recipients were not reversing the credit. So department were not able to have a track of who are the suppliers to whom the discounts are given and whether those are reversed or not, because earlier IMS was not there. Now we have a clarity of IMS, so wherever credit note is issued, if they are reversing, accordingly the system was able to take care. But earlier period it was not there, so they brought by way of CA certificate and all other certificate, but now they have removed even this circular also, 2/1/2024. You can refer this. I think till it is withdrawn, you can try to use this circular wherever possible. And if any notices are coming, try to look into those monetary limit also. Whether he is a jurisdictional officer for that notice. Right? There is a monetary limit specified for, especially in the case of central officers. State officers, I am not finding any notification or circular for monetary limit. Even CTO can pass the order of 5 crores. Right? But in GST, central GST law, we have a monetary limit for each kind of jurisdictional officer. So based on that, even for 74A, because earlier it was 73, 74, now we have 74A from 1425. So I think you can just check, only the tax and penalty up to 10 lakhs can be looked by superintendent, and 10 lakhs to 1 crore it has to be looked the case by deputy and assistant commissioner, and disputed quantum up to 1 crore should be adjudicated by additional or joint commissioners. And for 75 to wherever the case has to be referred from 74 to 73, they have given the quantum, and even for penalty also, if there is a penalty order, you have to look into those quantums and check whether he is the jurisdictional officer for those transactions. Right?
Sometimes we receive parallel notice from the central as well as state. And how
we have a decision, we will discuss our cases there, we will discuss on. Please remind me on that, and I will give in detail how to look into that actually.
For audit there is no audit there is no
Audit no limits. Limit is there only for adjudications, no limit for audit. They can go into any quantum actually. Right, so this is fine, you can look into this. Now we have advisories. I think most of you might be updated with this advisory, but I thought few important advisory which we generally miss out to look into that. Especially I generally miss out many procedures, so I thought let us read together. For deemed export, there was a specific column they have tried to remove this. Earlier there was a restriction from this period to that period, there is nothing like that. You can file for any period based on your invoices, so that from and to period has been removed for this deemed export. I think this is one of the welcome thing they have made it. And second is, this is applicable for export of services with tax, SCZ supply or supplier of deemed export. Anywhere you can go for any tax period, you can apply for refund. So that period from and to has been removed, and I think you can just go through into this. Next is, earlier you were able to make amendment in GST 3B. Now you cannot make amendment. Basically, you have to make an amendment through which form? I think you should tell me now. After GSTR 1, which one you file? 1A. So from 10 to 20, I think we are totally engaged. Yes or no? First, what we see? GSTR 1, then 1A, then 2B, and then finally. So I think this is a sequence of activity which we look. So that is what they have brought out an advisory for here. And next is, there is one more e-way bill portal. There is a second version of e-way bill. Already existing is there. There is one more. They want to come out with e-way bill 2 portal also. How we had GST 2, we also have something called as e-way bill portal 2 also. You can use this website also, which is effective from 1st July 2025, just to update the e-way bill procedure. So just they wanted to inform that also. And related to this government transactions, earlier we were trying to add this consolidated amount. Government was deducting TDS. I think most of you are aware that TDS was deducted on gross amount. I don't know how many of you are handling with this government entities. So government department were not able to reconcile to what extent TDS has been deducted and to what extent invoices were issued to the government. And majorly I am able to see that contractors, whoever are handling with the government, They are following which method of accounting? They are following receipt method of accounting. Only if they receive the amount, they are going to pay that. Majorly, I am not saying everybody, but majorly I am able to experience that from last 5 to 6 years, irrespective of the standard of accounting, they are following that. So I think they wanted to track those transactions and they have brought out invoice-wise reporting. So earlier we were reporting consolidated. Now in GST 7, I don't know, in system they are trying to implement this. So they are supposed to implement from 1/4/25, but till August or September, I was able to see that still it is not effective. Many times there is an amendment in the law, but accordingly the portal is not updated. But I would like to add up, I think practically it has been effective from November or December, the portal has been activated, that is what was told. So you have to look into those invoice-wise reporting also. Then IMS, I think whatever IMS you are saying, it cannot be continuous, it will be there only for that month, and you can just refer this. And very important is, whatever these returns you are filing, 1, 3B, 4, 5, 5A, 6, 7, 9, 9C, it is there only for 3 years. So whenever we are filing GSTR 1, GSTR 9, 9C, please that if you want to get the record of earlier years, you may not be able to get, because from November 2025, they have removed all earlier years data. So I advise all the members, even I tell to my office team also, try to see that you download those details. Whether it is there in the portal, so don't keep it as, you please try to download GSTR 3B, GSTR 1, whatever your 9, 9C, because that definitely will assist you, because system is giving a time lag of only 3 years, so they cannot file GSTR return after expiry of 3 years. So even if you want to file after 3 years, you may not be able to file GSTR 1, but just 1 week back, I don't know now it is existing or not, there is one tab, if you can just look into that, file old returns, something is there, just check that, because one of my client I was trying, where before 3 years his registration was cancelled. So I wanted to file the returns, but system was not allowing because 3 years has already been passed. So I tried, there is one tab, just try to see, you can try to file old returns in that. Before 3 years also you can try to file. There is some tab they have come out in the portal, but there is no advisory for that. So you can just look into, even the returns have been over 3 years. But I am just advising you, just try to download, so soon they are going to remove those data actually, beyond 3 years. And one more practical case we are facing with most of the taxpayers, I think you are also experiencing. In the case of import of goods, the bill of entry is not integrating with GST 2B, right? So majorly the client is saying, madam, it is showing in my IceGate portal, it is showing, but it is not reflecting in my GST 2B. So whether you should take credit or not? You should take or you should not take? You can take it, right? You please take it, and then whenever it is there, you can try to reconcile. Definitely it will show the red sign, but they are trying to, advisory is trying to come out that yes, they are trying to comment and try to see that no action is treated as being accepted for this import related. So try to take wherever possible and try to integrate it, otherwise we will lose the credit on that. So this is also a practical problem with this import of goods. Integration of bill of entry with this GST 2B document, right? Next is advisory on this. There is one more thing very smartly they brought out. If you are not going to upload your bank details, if you are not going to authenticate your bank details, they can suspend your registration. I don't know, nobody has challenged on this. I was just trying to see. What they have brought out is, if you are not going to update, furnish the bank details within 30 days of your registration or before filing GSTR 1, they have come out with the advisory saying that you are immediately, it will be your registration will be cancelled. What they have said, update details immediately to avoid suspension of GST registration. So wherever taxpayers, if you are able to trace it out, if you are not updated, please try to update the bank details. Otherwise, they are coming out saying that they can suspend your registrations, right? Whether it is core field or uncore field, just try. It is not, though it is non-core field, but just try to update that details, right? Now, this is one more important. I think this is one more year-end verification you all have to do. Electronic credit reversal and reclaim statement. What is this reversal? We take whatever credit we are taking, we are temporarily reversing it, and once we are eligible to claim it, we try to reclaim it later, right? But to have a track of that, there is separate statement. You can rely on this. Year-end, please try to trace it out. This electronic credit reversal and reclaim statement, right? And try to reconcile with your books. Whatever the credit is there, temporary reversal, and to what extent you have reclaimed it. I think this will definitely help you out. It is already there in this portal for all your taxpayers. So try to see that how much is temporary reverse and how much is reclaimed. In one of the taxpayer, by mistake, instead of temporary reversal, he has done a permanent reversal. You know, 4B1 is for permanent reversal. 4B2 is for temporary reversal, right? You can reclaim only temporary reversal. Now this taxpayer, while filing the return, instead of temporary reversal, he has done the permanent reversal. What is the solution for this? You understood? 4B1 and 4B2. I think today we would have already started filing these returns. What is the solution for this? System has tied your hands already. Earlier something happens, we will be rushing to the officers. So what we try to do here is, I know mistake has happened. So we try to give a letter to the department immediately saying that there is a procedural error which has happened. We request you to activate from the backside, try to see that you reverse that credit so that we can take it as a temporary reversal and reclaim it later. Because permanently reversal, you cannot reclaim it. But if it is a temporary reversal, you can reclaim it. So I think please look into this credit reversal statement to identify whether all our temporary reversal are taken into this or not, or whether something has gone to a permanent reversal also. Because my reconciliation in few cases has happened in few cases, so I would like to tell that please look into this as a year-end reconciliation statement.
Mandatory to follow that procedure.
Which procedure?
Because Rule 7, Circular 170, we have seen many summons have been issued. Is it mandatory to follow this all or it's every year? Because the department is forcing the client to follow this reversal, claiming everything and putting it temporary.
See, I'll tell you why they are telling this. One thing is, if you don't claim and reverse, government will lose a credit, right? Government cannot show. See, they have India being a federal country, if you are not going to show, they are going to, when they are going to calculate the compensation from the central government, to that extent there is a calculation issues. So especially they are telling that please show it and then show the reversal so that it will be assisting them for recalculating their computations.
It's an extra burden for them.
I know it's an extra burden, but it's a requirement. And I also advise, don't show it. Try to show it and take a reversal. I think that will really help you out for your reconciliation, and it will really give a depicting figure to the department saying that yes, we have shown the credit and we have reversed it. Tomorrow we don't know what is going to happen on that. At least you have availed it. If you are not availed in your return, not reclaimed, tomorrow I cannot justify during the time of assessment. No, it was eligible, I have availed, I have reversed. Difficult. So always, nothing wrong. Show it in 4A5 and show it in 4B2.
Even after the time limit is over, within the ITC.
No, after the time limit is over, you cannot avail the credit, right? After the time limit is over, you have to go to the other routes.
Usually officers calls and says that there is no time limit for claiming and reclaiming because
that is
do it by
yes, that's why see when there is no time limit, which 16 for credit.
16, yes.
What I also advise is please claim the credit or reverse the credit as of date. When it is doubtful, please reverse the credit. And when it is confirmed, take it as a pre-claim credit. That is better than not taking the credit. Because 16.4 give you the time limit for 24, 25, 26. What is the time limit to avail the credit? Up to October. So if you are not availed, you may not able to enjoy that credit or to. Later on if you want to reverse, if you have that balance in your credit ledger, you will save interest also. But not taking credit is more dangerous. Better to take and reverse the credit. If you are very doubtful, take it as temporary. If you are very sure, take it as permanent reversal, whichever you want to classify according to the self-assessment. Next is, they are having this reversal RCM liability statement also. These two documents are very, very important. One is credit reversal and reclaim, and one more is RCM statement. Please recheck whether all the months you have paid the reverse charge tax and whether you have reclaimed the taxes. I think this statement is very helpful for all of us to check is there any RCM which we have missed out or where we have missed out to take the credit also, right? So you can really look into this. This is only kind of assisting statement which is already available in the form of tab in the state portal. Now one more is negative balance, negative closing balance. So in these tables, if you are having a negative, whether it is RCM negative or credit reversal is 1 lakh, reclaim is 1,10,000. So how much is the negative? 10,000. Reverse payment was 1 lakh, but you have paid the credit of 1,10,000. So it will come as a negative or positive. You can re-look into that. If it is a negative, you have to make a payment to that extent. Yes, this is the most important now. Next, this is a important advisory. One is revised interest computations, advisory auto population of tax liability breakup, ITC cross utilization or interest in GST1. I'll just tell you in brief so that we can look into these details. One is, any times whenever we were filing the returns, I'm not very good at compliance, but I'll just try to, whatever I've learned with my team members, I'll try to share with this. Whenever we are making a payment, we were filing the returns, right? I missed October invoice, right? Or as a chartered accountant, if I am also practicing, I would have issued the invoice in October. But I missed out to include in the month of October. So what I will do, okay, I'll tell team, okay, including December returns. What we were doing, we were not, most of us, what we used to do, okay, we have missed out in October, let us take it in December with tax, we would have paid it. They were not able to track that there was an interest from October to December. So now in the system itself, they have brought out one tab called as revised interest computation. Automatically that is going to compute. How they are going to compute? There is one more advisory, tax liability breakup, that will give an invoice of previous period, that will give invoice of current period also. In preview itself, you will have invoice of October, you will have invoice of December. You are getting it? So, to the extent of December to October, if you don't pay that interest, you cannot file your returns. And this is activated from this month itself. Yesterday only I was seeing filing of 3B, where they have come out with this tab. Without this, pressing this tab, it is not allowing you to move forward to file your returns. So I think you have to check this. And whenever you are calculating the interest, automatically it is taking into consideration whatever the cash balance is available in your cash ledger. To that extent it is reducing. Only on the balance it is going to compute the interest. So don't, manually we were doing this, now automatically system is going to look into this. So earlier what was happening, interest was getting calculated on full net tax liability, but now the system will take it only on net tax liability minus minimum cash ledger balance which is there, automatically it will going to consider. It will get to the benefit of all minimum cash balance in electronic cash ledger, and it will reduce the interest burden, and it is already auto-populated in 5.1 of PP. So you need not worry of this interest calculation. Automatically from October to December it will calculate and you are supposed to make a payment. So no manual intervention, its system will automatically calculate based on the date of invoice.
Okay, so we will put that this is the invoice for the month of October and then the system will recalculate.
Yes, yes, that is what the advice we say.
Okay.
Yes. So earlier manually we were computing all that, now no manual computation, so we cannot escape that, system is automatically taking care of all this. I think in one hand it is better, rather than realizing later and then later, it's better at the time of filing returns only we are paying. So this tax liability breakup already I have told you, October relating to tax breakup and December related, automatically the system will come out with the previous returns and the previous tax period reported in current period. So automatically it will come in that return 6.1, tax liability breakup. This is effective from January 2026. And ITC cross utilization enhancement, more enhancement is given that you have to exhaust your IGST first. Then you have to look into this CGST and SGST. Earlier what we were doing, proportionately we were trying to adjust to some extent from IGST, but I think they have tried to bring out saying that IGST, ITC must be fully exhausted first and then you can use CGST or SGST in any sequence. So you can choose the order of utilization and this is effective. This is being made in the system itself, right? So right, I think this is fine, there is a utilization. And many times what was happening when we were filing the returns and we were closing the business. And we were filing GST at 10. Whenever we are closing the business, we were filing GST at 10. But there was no mechanism to pay the interest, right? How to pay the interest? Because my registration is cancelled, I have filed my final returns, but there was no column to pay the interest. So in the GST at 10 itself, they brought a column for making the payment of interest. So any delay, anything you have delayed in paying the taxes or filing the returns, accordingly, the interest computations can be done in GST at 10 itself, right? So I think these are the certain amendments which they have brought out by way of advisory in the portal itself. And next, whoever is handling this hotel business, where your room rent is above 7,500 and you also have a catering restaurant also. If you want to opt it as a specified premises, I think by 31st March 2026, try to file a declaration wherever you want to avail the benefit. In this case, if the room rent is above 7,500, the rate of tax is 18% with ITC, but simultaneously you also want to give that benefit to restaurant also. So wherever for restaurant, if you want to pay 18% with ITC, you have to apply for specified premises. If you have already applied for the earlier year, it will continue unless you withdraw it, but try to file this, you can refer this notification 5/25. Whoever is handling this hotel accommodation service providers, please look into this declaration and try to file before. If you are not going to file this annexure 6, 7, 9, all that, then you will lose the benefit of that specified premises. So the time limit is from 1st January 2026 to 31st March 2026. So you can try to file it for specified premises. You can look into this reference of notification and advisory. Yes. Now one more issue. This was whenever we are facing some practical issue, immediately we are able to see either some advisories issued or some circulars are issued. So basically this advisory is very helpful to most of us, because many instances I think you would have experienced that you would have made a payment through DRC3 during investigation, right? Or during adjudication, or after adjudication order also we just pay DRC3 without connecting with any demand liability, right? Just because of officer harassment or officer reason, or because of voluntarily, without admitting, under protest you would have paid that amount, right? Now what was happening was, demand order is issued, say for example 5 crore, right? Voluntarily during investigation I would have paid 40 lakhs. After order I would have paid 10 lakhs, right? Already through DRC I have made a payment. But when I am filing the appeal, the portal was not allowing me to adjust those DRC3. They said no, until you don't make payment of additionally this 10% of 50 lakhs, we are not going to give you the benefit of it. That 5 crore into 10% is 50 lakhs. So till now, whenever we were filing the appeal, even though we would have paid under earlier all this DRC3, we were not able to appropriate the DRC3 with this pre-deposits, right? So now on March 14, they brought out one advisory, very important, very helpful advisory. Wherever you would have made during investigation or after adjudication order, please try to appropriate that through DRC3A, right? Appropriate that. Debit to your electronic liability ledger and appropriate that amount to your amount, and when you are going to file an appeal, it will automatically calculate. If it is taking 10% of that amount, it is fine. It will take it as a pre-deposit. If it is less, then automatically it will show balance tax payable. So I think we have to see now, because after 14th March I have still not filed appeal, so I don't know how it is working now. But I think this will definitely help to most of us, where you would have already paid either after adjudication order. Some lawyers also calls me, madam, we have paid already through DRC3, now we want to file the appeal, we are not able to appropriate that DRC3 while filing the appeal. So this advisory is very helpful. Wherever we are paid through DRC3, please appropriate through DRC3A and try to make a payment of pre-deposit. I think this will definitely help you out while filing the appeal, and there is no additional requirement of working capital, right? Last slide I just come on. So I think we'll have a break of 10 minutes, 15 minutes. Okay, we'll have a break, and then we are definitely going to discuss all these practical case studies with related to the practical case of judicial pronouncement and connecting with all our day-to-day practical case studies, and then we are going to at end we are going to discuss on the year-end reconciliations, which you are supposed to do by March 31st and which you have to comply till March 31st. I think that we are going to end with that session. So hope to see you after 15 minutes. Thank you, Anita. Hello. Just try to, the next version is, we are discussing certain case laws which are related to High Court judgment also and pure Supreme Court judgment. So whatever the decisions we are sharing, it is only for our, it might be reversed at a higher forum also, but it is as on date, whatever the judgments are there which we can try to read into. I will just try to bring a brief of those case laws, and if it helps for your analyzing of any of your case or for interpretation of the law, I think you can rely on those kind of judgments. So basically, I think many times, especially central authority tried to bring out a notice of 74 and tried to say that it is leading to a suppression. So I think one of the Karnataka High Court decision, I was just trying to read into that, where they are trying to bring out that it was a matter of interpretation and a clarification circular was issued at a later point of time. So based on this clarification issued at a later point of time, the taxpayer is trying to interpret that when the clarification itself was, when the law itself was not clear, and for that the clarification has come at a later point of time, then how can you treat this liability as a lead to a suppression? I think many instances we see in the notices that there is a levy of taxes, interest and penalty under 74. I think we can try to rely on that whenever you find some clarifications or issues which are issued at a later point of time. We can try to refer this decision, especially when the notice are adjudicating that it is leading to a suppression of taxes. So if there is any clarification at a later point of time, or if it is a matter of interpretation, or if you have already disclosed that income, I think we can try to look into this reference of this decision of BSH Household Appliances versus Commissioner Karnataka High Court. The next is the Honorable Supreme Court judgment of Satish Chandra Sharma, where they have tried to give out certain principles of application of circulars. If it is a beneficial circular to a taxpayer, it can be applied retrospectively. But if it is an oppressive circular, then it can be applied prospectively. So I think this judgment will help us out in the cases wherever there is a circular, whether it is applicable retrospectively or prospectively, wherever we have this matter of interpretation. I think we can try to rely on this decision also, where it is substance over the form, and clarificatory circulars are always, this is from the erstwhile law also, we are bringing out this principle. So there is no fresh burden on the department because circulars are also binding on the department. So based on this decision, I think we can try to bring out this principle saying that clarificatory circulars can operate retrospectively. So whenever we are able to rely on those circulars and which is clarificatory, I think you can try to look into those principles also. Then next is, I think this has come in the media also and many more, because there was a huge taxes which was demanded by the department saying that this solitarium component of this land acquisition will attract GST as it is a targeting an act, because there was a KIDB has acquired this land for this BMRC project. So landowners were getting a compensation including this solitarium component because they are taking that premium area. So for that they are paying extra compensation plus solitarium component also. So the department was saying that because you are getting an extra consideration in the form of solitarium, it will attract a GST because it is nothing but tolerating an act services. So this has gone up to the Karnataka High Court, and Karnataka High Court has tried to bring out that it is not falling into any of the entry of this construction and it is purely a transaction of immovable property, and accordingly this is a compensation and not a consideration what they are receiving, because there is no agreement between those what I can say between this state and with this landowners, and there is no quid pro quo also. So accordingly there is no consideration which they are receiving a compensation. So there is a difference between consideration and compensation, so there should not be any levy on statutory compensation and it is not a consideration. So we have to wait and see how it will be tested in Supreme Court, but as on date they say that it is not liable for GST. So I also have my view that it is not at all a tolerating act and it is a transaction in immovable property, so it is neither goods or services, so accordingly it is not liable for GST. This has been discussed in decision of Srimati Asha versus Assistant Commissioner 2025. So solitarium on land acquisition is not liable for GST. Few of these landowners have received their notices, even we have seen those notices, so based on that they are not liable. Next. Then one more is this assignment of leasehold rights. This has been given by Gujarat Chambers of Commerce decision, and I think this will be tested by the Honorable Supreme Court whether this assignment of leasehold rights are subject to GST or it is not subject to GST. So in this decision they have tried to say that it is nothing but a benefit which is arising from an immovable property. So it is a transaction in land and accordingly it is not liable for GST because assignment of leasehold right is not subject to GST. But I still have my strong belief that it will be tested by Honorable Supreme Court. But as on date, if you are having such instances, you can rely. And I remember there is one more Mumbai High Court decision also where they have tried to highlight it is not liable for GST. So we have to wait and see how it will be taken by the higher forums. Then next is this. I think this is one more very important decision of Honorable Supreme Court of DGGI versus Central Electricity Regulatory Commissions. We can try to apply this for the organizations who are providing the sovereign functions or statutory functions. We have many institutions today who are rendering this kind of statutory functions or sovereign functions. So the department is trying to bring out them as a commercial transactions and say that you are eligible for GST. I think we can try to rely on this decision saying that regulatory fees, whatever those institutions are collecting, it should not be subject to GST because it is not at all a commercial or business activity. It is basically a statutory functions. Though there was a erstwhile service tax law had a circular saying that even though it is a statutory, but if it is in the form of commercial transactions, it is leviable for service tax, and similarly even the departments are also levying in the GST law also. But somewhere wherever the taxes are not paid, especially for this statutory association or sovereign association, wherever they are not having any business or commercial activities, I think you can try to look into this wherever this regulatory fees are collected, which is not subject to GST. Right? So here they are trying to bring out this whatever the license services or tariff services which the Central Electricity Regulatory Commission authority is giving are nothing but statutory functions, and accordingly it is not support functions, not a commercial function, accordingly not eligible to GST. It is only a decision which you can rely, especially in the case of functions which are relating to statutory functions. The next is, I think this is one of the most common issue which we have is, many times the department try to block your electronic credit ledger, right? Now, for example, your balance available in your electronic credit ledger is only 1 lakh, right? Can they block beyond 1 lakh? No, right? But if you, and even the rule also says available in credit ledger, right? But departments are trying to block your credit more beyond the credit ledger, and they are trying to say that negative blocking of electronic credit ledger. So it has gone to the Supreme Court, and Supreme Court has tried to bring out saying that negative blocking of electronic credit ledger is not permissible because the rule itself is saying available in credit ledger. So only to the extent what is, even though your liability is 5 lakhs or 10 lakhs, but if your balance is only to the extent of 1 lakh in your credit ledger, you can block only to the extent of amount available in block. You can follow other recovery mechanism, but you cannot follow the recovery mechanism by way of blocking your credit ledger more beyond the credit what is available in credit ledger, right? I think many decisions were there. So now they have tried to bring out that negative blocking of electronic credit ledger is not permissible, right? And there was one more decision of Anand Traders also. This is a Delhi High Court. Even in this case also they have said negative blocking of electronic credit ledger is not permissible. You can rely on this decision also. Then next is even in this decision they are very clearly stated other recovery remedies are available. So you can do provisional attachment, you can do bank attachment, but you cannot follow this mechanism for recovering the amount from the taxpayer. Now next is, many instances we have seen that show cause notice are issued for some grounds and the order is passed on different grounds, right? So in this one of the decisions they have issued the show cause notice, and in the adjudication order they have come out with a new ground, right, which was not at all discussed in show cause notice. So based on this decision and even based on 75 subsection 7, you can try to argue that you cannot bring out a new ground in the order which is not covered within the scope of show cause notice. I think this will definitely help in many instances where it is not covered in the show cause notice, but they have taken a new ground in the adjudication order. So order cannot cover the grounds which are not within the scope of show cause notice. So I think just try to look into this. This is the most important decision I felt, because many instances we have tried to take out this ground and try to get a relief at the appellate level also and at the adjudication level. So I thought it would be helpful. So try to bring about this High Court of Calcutta on Dock and Pharma versus Deputy Commissioner decision. Then next is this Alstom Transport India decisions, where I think even this secondment, whether there is a GST levy on this secondment, I think this is argument is there from last 5 to 6 years. Department has already issued notices to few of the Indian companies to pay the taxes on those secondment, where they are reimbursing the salary cost of an Indian employee, treating it as a manpower supply. So I think this is still pending before the High Court of Karnataka, and High Court of Karnataka has told that there is no liability on this secondment of arrangement, but I think still it has to be tested by the higher forum. So as on date, it is still with the Karnataka High Court, and it has even said, ruling has been stated that no IGST liable on secondment arrangements. Right? So they are also relying on the circular also, and there is an employer and employee relationship, so there is no manpower supply services, accordingly not liable for GST and not treated as taxable supply. But I think we are just trying to look how it will be tested, otherwise we can rely on this Karnataka High Court decision to that extent. The next is very important. I think this is the most common issues most of us are experiencing, especially in the case of e-way issues, right? What happens generally? What generally happens? The officer will issue MOB1, the officer will issue MOB2, then once you pay the full penalties, what they will do? They will release the order MOB5, right? The driver also doesn't know which form to be carried, the driver also come out with MOB5 and you want to file an appeal. Can you file an appeal against MOB5? No. Many a time we have to be very smart enough to see that if MOB9 is not issued, you cannot file an appeal. You cannot file appeal on MOB5. You have to receive MOB7 as show cause notice. If not MOB7, at least you have to get MOB9 as an order. So whenever you are trying to, as a owner or as a practitioner, if you are trying to reach a transporter or officer, don't forget to take MOB9. I've seen many, I get many times the please file the appeal against this e-way bill matter, but without MOB9, I think you cannot file the appeal. You try to see that at least they give you that manual order, or try to see that they are uploading that MOB9 in the portal. So that is what this Supreme Court decision in the case of ASP traders, they have tried to bring out that there should be a formal order in MOB9. Without this formal order, it will not be a speaking order, so it will eliminate the adjudication itself, and it will eliminate all your appeal rights also. Whatever appeal filed, it will be not within the purview of law. So wherever you would have filed the appeal for e-way bill appeal, please be careful that you try to receive MOB9, try to trade transporter. We have done this. We are back of the transporter and we have tried to see that officer issues MOB9 immediately, or try to take those jurisdictional address where we can try to collect this MOB9, right? So don't rely only on MOB5 and MOB6 and try to say that my payment is done, I will go for appeal. No, you try to collect very important document is MOB9 and try to see that they file it, they upload it online so that you can file appeal online. If they are not uploading online, try to see that you at least file the manually and try to update later with the electronically, right? Fine. Then next is this Indian Medical Association case. This is a Kerala High Court judgment which is talking on this mutuality principle. I think some of you might be aware of Calcutta Club decision, which was there under the service tax law, where they said based on doctrine of mutuality, there is no levy of service tax between this association and the members because both are one and the same. So they brought an amendment in section 7 in the GST law in 7(1)AA saying that any activity between this association to its members is liable for, it is treated as supply and accordingly liable for GST. Based on that, this Indian Medical Association has challenged before the High Court saying that this section itself is unconstitutionally. It cannot be applicable retrospectively because this section has been made retrospectively. It is unconstitutional. It has to be struck down. So this is a High Court judgment. I think it is pending before the Supreme Court. We have to wait and see whether similarly based on Calcutta Club case, whether they are going to levy the taxes or whether they are going to treat it as unconstitutional. So wherever you are handling this association with the members, and wherever there is a litigation dispute where you want to pay under protest, I think you can try to rely till the decision is concluded wherever they are not as paid. So because this is being a retrospective, try to be very careful and try to have the risk of interest component in case if this Indian Medical Association is going to get reversed at a later stage. So there are both possibilities because already the Supreme Court Constitutional Bench of Calcutta Club is there. So we have to wait and see how they are going to bring out it. As of date, it is given by Kerala High Court, right? So this you can just rely. And then I don't know, looks like little difficult, but I thought sometimes we don't know, we try to approach the court and try to get might relief. So even in this case also they have tried to rectify the GST law beyond the statutory line because of some technical issues. So court has held that if the rectification is allowed because of some technical or portal issues, the benefit should be given. So I generally advise to all of you, whenever there is a technical issues or portal issues, try to take a screenshot of that. Right? Because in one of my case, the taxpayer was not able to file for November and December in 2017, right? And the taxes were around 12 lakhs or 30 lakhs per month, so around 25 lakhs he was not able to pay. And after that, in September 18, he paid that 12 lakhs and 13 lakhs, whatever the amount was there. The department issued the notice for 17-18 saying that you have not paid the interest from November to September. Fortunately, the taxpayer has taken a screenshot of the technical saying that, see, this is not allowing me to file the returns. So any compliances, I am talking a simple example of returns, anytime you are filing refund application, appeal or any procedure you are doing technically, and if it is not allowing, please don't miss to take a screenshot of that. Only the screenshot which has been taken by the taxpayer has helped me to save the interest from November to September 2018, right? I got favorable order only on one document, that is nothing but my screenshot, and it saved a huge amount of interest for them. I think we can try to bring out and try to see that we can save the interest to that extent with one procedure itself. Then this is like non-estate decisions. This is also Karnataka High Court decision. Where they have received the advances, they have already paid the taxes to the government. They are refunding those amount to the customer. So they are claiming the refund from the department. So as they have not refunded those taxes to the customer, they want to take a department refund from the department. So department is denying. So ultimately it is held that once if the transaction is not occurred, there is no supply. So once there is no supply, it is not a tax. So once it is not a tax, it has to be refunded to the taxpayer. And there is a very section, I don't know why they have gone to the court. There is a very specific section 54 subsection 8 where it is very clear that once you have received an advance, you have to issue a receipt voucher. Once you are paying that amount, you can issue a refund voucher and accordingly can claim the refund of that. But anyway, they have gone to the court and accordingly court also held that they are eligible for refund. Yes, this decision many of us are relying especially for ITC, right? This is a bad decision. This is not at all a GST decision where they have tried to say that if the purchaser has already paid the taxes to the supplier and all the transactions are genuine, the input tax credit should not be denied. But as per my view, this decision may not be 100% applicable. We can rely on the principles of these decisions. But the provisions were different in VAT law, the provisions for input tax credit is different in the GST law. Why? Because GST law has come out with 4 conditions, which was not there in the specific conditions were there in the GST law, similar conditions were not there in the VAT law. So there was a burden of proof. Similarly we had, but I think this we had Arise India case was there. Then we had a Supreme Court decision. Then we had Shanti. And there are various decisions in the VAT law where they said that if the burden of proof is proved by the recipient saying that yes, I have made a payment to vendor, I have received the goods genuinely, all those email bill is there, delivery challenge is there, everything is there, I am able to take the credit. We are trying, I think even in the GST law also, wherever our vendor has not paid the taxes, we are trying to prove them with all the documents what we are having, because as per 155, burden of proof is on the recipient to prove that he is eligible for credit. So we are trying to rely on the Shanti Kirat. You can rely wherever you feel that you want to take a benefit and burden of proof you want to prove, you can rely. But according to my view, 100% it cannot be a binding decision for the GST. So this is only to justify this bona fide purchases. We can try to rely on this. Then we have to just see how this is going to enter. I think a lot of joint development agreements were entered prior to 2017, right? And most of this contract got executed in GST law. So there was an argument with the department. We also tried this argument saying that the levy has occurred in pre-GST regime, right? And the time of supply has occurred in GST regime. So when the levy itself was there in the pre-GST regime, where is the question of paying the taxes under GST regime? So this was an argument wherever the joint development agreements were entered prior to GST regime. So this was one test of law we tried. But now High Court of Patna and Shashi Ranjan construction case has said even though the agreements are entered prior to GST regime, still you are liable for GST. So I think this is something it has to be tested at the High Court with the base of levy and time of supply. But I just would like to give a reference to numbers, so I have just added here. Then this is also one more very interesting decision. In one of the case, taxpayer has taken the registration even in the name of employee in another state, right? Practically I'm the same, and I'll just try to connect with this case. I am registered in Karnataka. I have taken registration in another state in the name of my employee, right? With his PAN, with his details, considering him as a facilitating person or head of that company, I have taken a registration in his name. Now tomorrow, non-compliance has happened with this company. Who is liable for the penalty?
Employee.
As an owner or as an employee?
Employee.
Who should be liable? If you read 122 section, it says any person. Are you getting that person? It says any person who has evaded the taxes, who is responsible for evasion of taxes. If you read strictly. But if you read this decision, there are two views I would like to bring out to the members. Two decisions are there. One is, in the case of Shantanu Mundakeri, they said no penalty on employee. Because he is just an employee, he is not liable for such a huge liability. Only the owner is liable, right? What contradicting decision is given in Gurudas Malik Thakur decision, where they said no, even employee is also liable because he is also a party to that contract. So there are different, because see how much amount it here, 3,731 crores. So I think looking at that amount itself, judge has decided no GST on employee, right? So but be careful, very clear, law is specific, especially 122(2)A has used the word taxable person or registered person or employee. I think there is always a issue with this, so I think we have to be very careful on this and try to see that there are various decisions which are giving a contradicting decision on this levy of penalty. So if he is involved in the transactions, I think somewhere the department is going to take action against that employee process along with the owner.
And if there is an authorized signatory and the person who represents Navy, then like penalty will be on whom? Authorized signatory or all the partners?
No, see, it's not only based on author. Even we are also authorized signatory in many cases, right? But whether he is involved in the transaction. See, 122(2)B is for the circular trading. I'm not talking of general penalty. I'm talking of the circular trading transactions where they are retaining the benefit of that. Then in that case, he is also becoming a party to that contract. Like if you read 137, there is a liability on directors, there is a liability on partners, there is a liability on employee. Unless they don't prove themselves that they are not responsible for that mistakes or negligence, they are also held liable for GST. But in erstwhile law, we did not have this kind of provisions. So directors were escaping. But now in the GST law, there is a section 137 which clearly says that if you are not able to prove yourself, then you are held liable for those offences also.
But in most of my cases, they have parents as a partner just for the namesake, why they don't know anything.
See, as long as you are doing your transactions within the purview of law, no issues. But something you are doing some loose transactions in the name of employee, then somewhere employee is also at risk. Though there is a decision that there should not be any penalty on employee, ultimately owner, so employee has to prove that he is ignorant of that. If he is not able to prove that he is ignorant of that, then based on 137, even he will be held liable for penalty and prosecution. Right? This was Provident Housing Fund. This is a Mumbai High Court decision where they are trying to discuss what is the time of supply for JD agreements, whether it is at the time when they are entering into an agreement or at the time when the conveyance deed or allotment letter is given to the landowner. So I think there is a issue with this. They said that it is on the date of JDA or it is on the date of property conveyance date. So I think this issue is discussed. I still believe that it will be tested at the Supreme Court date. And here they are trying to say that it is liable at the time of conveyance date and not at the time of JDA date. So this Provident India, somewhere wherever they are asking the taxes at the time of agreement, they are trying to rely on these decisions. And even 4/18 is also having a different terminology for that. So I think based on that, they are trying to say that it is leviable at the time of conveyance date and not at the time of JD entry. So we can rely till the tested by the higher forums. Then next is, this is one of the Mumbai High Court. In one of the case, show cause notice is, I think we would have experienced, most of us, show cause notice issued last week. And this week we are receiving the order. Yes or no? And many times time bar case I have seen, same day show cause notice, same day order. When the last date of order is there, morning show cause notice, evening order is issued. Because they want to pass that order within that limitation period. So there is a decision of AM Marketplace. They said that minimum 3 months gap should be there. So wherever you want to challenge, you can try to rely. The time lag between the issue of show cause notice and the time lag between the order, there should be 3 months gap, right? You cannot just issue without testing, without looking into the show cause notice, without giving the opportunity of heard, without reply of notice, without grounds, you cannot just pass the order. So something you can try to rely. And this judgment says that there should be a time lag of 3 months between show cause notice and order. I think somewhere you can try to rely on this wherever they are passing on. Then this is I think this will be the most common grounds which most of us are litigating, especially when we have time barred appeals. They have already uploaded, say, in October. Yes, we have not seen the portal. Now in March they saw that, oh, some order is uploaded. What is the time limit to file the appeal? 3 months. Yes. So whether time limit is completed or not? October, November, December. So time limit is completed. We cannot file an appeal beyond this period. Even though if you have to file, it has to be, it will get rejected at the first level and it has to be approved at the higher level. Many of the taxpayers have gone to higher forum. Now the issue is, what is the effective date of communications? What is the effective date of communication? Is it a service of notice or is it the date when I have seen that notice or order? Because 169 use the word service of notice or service of order, whereas 107 is saying communication. There is a difference between service and communication. When I got communicated in the month of March. This is the one-way interpretation of service and communications. So various decisions, I think you would have seen, many decisions have said no, it is communicated, it was not seen, it was with all, many reasons are there and they are remanded back for filing the first appeal. So I think you can just try to interpret on the basis of service of notice and communication and try to test for this time barred appeals also and try to see. I think it will be tested with the Supreme Court, I am very sure, but I just want to bring out to your notice on that aspect. The next is this. Many times we have this provisional attachment. They do the attachment. After 1 year, they will say, okay, we'll renew that attachment. No provision for attachment. There cannot be attachment for more than 1 year. And there is no provision for renewal of that attachment. They have to withdraw that attachment. Even if they want, they can issue the fresh attachment, but they cannot renew the provisional attachment. We have tried with this letter and we got favorable saying that yes, there is no question of renewal. They can only come out with a fresh attachment. Right? Rohan Corporation, I don't agree with this completely, but anyway they have tried to say that this incompleted unconstructed building, that they did not have any agreement with the customer, but based that company got liquidated and that property got sold to that liquidator. So department is trying to bring out that there is a levy of GST, whereas it has tried to argue that it is an incompleted building, no construction service was provided, no quid pro quo. So accordingly it is a transaction in immovable property, not liable for GST. So this is what they have done, but I have my strong belief that it will go to the higher forums. Then this is also one more interesting case of Deepak Khandelwal, where the department generally come for search seizure. I think some of us would have experienced from some of our taxpayers, where they come for inspection, then they convert into search seizure, all that. So they have been given a limited power, right? They cannot seize your items which is not relating to your taxable supplies. For example, I am dealing in laptops. Yes, you are liable to check the inspection, search or seize only to the extent of what transaction I am having. You cannot attach my personal wealth. You cannot seize my personal wealth. Even there are a decision that you cannot seize the cash also, right? There is already a decision that you cannot seize the cash. you can only seize the transactions which are relating to your taxable supplies. So many times we have seen that they are trying to this unaccounted wealth, saying that it is an unaccounted and they are trying to seize it, whether your personal wealth or personal items. I think somewhere they are misusing that power. I think we can try to rely on this judgment of Deepak Khandelwal, which is very clear that they have seized the cash and silver bars during the search, classifying them as a unaccounted wealth. So the court has very clearly stated that subject matter of supply should be linked with the tax evasions. So they cannot seize those. So there is a separate procedure they have to follow. So with this search and seizure they cannot follow this. So accordingly it is not allowed. Right? Yes, this is also one notice for multiple years. I think I have read around 9 to 10 judgments only on these decisions. Even Karnataka High Court also said, few judgments are saying yes, one notice you can issue for multiple years. One more courts are saying that you cannot issue one notice for multiple years. So there are consolidated notice cannot be issued for multiple years. They are trying to interpret section 73 and 74 relying on tax period, all that they are trying to interpret and saying that it is beyond that limitation period. I think this is going to go to the Supreme Court and I am very sure that Supreme Court will not say that it is not allowed. It will be allowed, subject to that it is there within the limitation period. Right? So I think as on date this is an issue and we are trying to give the reply saying that you cannot come out with this bunching of show cause notice, but we have to wait and see because different high courts are coming out with different interpretations. Right? Yes, this is also Bharti Airtel, this telecommunication towers, whether it is immobile or movable property. I think as on date they are trying to test this telecommunication towers as movable property and ITC can be availed, but this is still Delhi High Court decisions. We have to wait and see if there is going to test further, otherwise input tax credit is eligible on telecommunication towers. And this Goa University and Northern University, I think here basically affiliation fees which are collected by these universities, it has been said that it is not liable because educational institution as such is not providing business. It is not receiving any consideration as such. So what are the affiliation fees collected by the universities are not liable for GST. So there are two decisions already on this. Northern University by Karnataka High Court and Goa University by Mumbai High Court, which has held that application fees collected by universities are not liable for GST. It is not a business, all that they have tried to come out. Yes, somebody was asking me if the proceedings are taken by the central and by the state, right? This is, I request all the members, please read this decision. Especially when you are relying, this is a Supreme Court, Honorable Supreme Court judgment of Armored Security India versus Commissioner, and at the last they have given the guidelines. Don't forget to read those guidelines which are given in the last page of this orders. I think around 14 guidelines, I think. 9 guidelines, sorry. They have issued the 9 guidelines saying in what scenario how it should be assessed. So basically I'll just tell you in brief so that you can further go into that. Here the department has gone before the court saying that if the taxpayer has already issued the summons, right? If he has received the summons from one authority, whether other authority can raise the issue in the audit proceedings or adjudicating proceedings, because even issuance of summon is also an initiation of proceedings. So we have section 6(2)(b) where it says that if the same issue is taken by one authority, then other authority is not entitled to adjudicate the same issue, right? It is issue based. If central has assessed 5 issues, and the same 5 issues cannot be assessed by the state authority. So it is very clear, 6(2)(b) is very clear. So department is trying to say that when the summon is issued, it means that already the issues are conducted, so accordingly the other authority cannot take the proceedings. So basically in this Armour decision they have said that issuance of summons or investigation is not at all a initiation of proceedings. Initiation of proceedings will occur only at the time of adjudication, that is at the time of issuance of show cause notice, right? And very important is if you are under state jurisdiction, then you should see which officer can issue it. If you are under the central jurisdiction, you have to check who is conducting the audit, right? But if you are under the central, the audit officer should be your central officer. If you are under the state jurisdiction, your audit officer should be state. But adjudication can be done either by the central or it can be done by the state. So issuance of summon is not initiation of proceedings. It is only a form of inquiry where they are collecting the information. Investigation is also a form of inquiry, collecting the information, and they have to conclude that investigation. If that investigation is completed for one issue, you can say that the same issue cannot be concluded in adjudication. So please read those guidelines. I think definitely it will help you out whenever you are receiving the multiple notices, Don't forget to reply to them saying that already this issue has been taken by the other authority, so we request you to drop that issue. If you are not going to put that submissions, if you are not going to rely on this armor, definitely they are also going to adjudicate that issue, right? So if it is the same issue, you can try to rely on this, and I request everybody please read this decision. It is very helpful, especially when you have a dual proceedings from the central authority as well as from the state authority, right? Yes, I think during this break we had a discussion with sir on this hostel buildings. This issue is there from 2017. The first issue is whether the hostels buildings which they are collecting the fees or rent from their from the working professionals or from the students, whether it is leviable for GST. The second is whether this hostel building is commercial or residential building. Third is if landowner, if a institution is taking a building on rent from a landowner, right? I am a person who is taking on rent from a landowner hostel building, and I am going to give this to my students or for my working professionals. I am liable for exemption, or even the landowner can also enjoy the exemption. You got the point? There is a landowner who is owning a building, right? He is owning a hostel building. He has given me on rent. I have taken that building on rent, and I have given this building on rent to my students or my working professionals. Now the issue is, whatever the landowner is giving me the building, is it a commercial or is it a residential? So this issue was raised before the Advanced Ruling Authority. Then it has gone to AAA, then it has gone to Karnataka High Court, and now it has gone to the Supreme Court. December 2025, there was an order saying that hostel building is residential building. Accordingly, they are not liable for GST on the amount what they are collecting from the students, and even this landowner who is Tagar Vasudev is also not liable for GST because this building is a residential building. In this judgment, they have relied on purposive. They have gone with the use of this. They have not got who is using what they are using. No, they have just got with the purposive interpretation, and they say for what purpose this building is. This building is used for the residential accommodation. Though there are various advanced rulings saying that it is liable, hostels are liable, you will find many judgments. But here, I think Tagar Vasudev, you can rely on that. Though, and based on that, wherever you are paying the GST, I think you can just try to test with this Tagar Vasudev judgment and notification 12/17 and 13/17, and try to test whether there is a levy of GST. So please don't miss to read this Tagar Vasudev decision, especially when you are owning a building and which is given for hostel purpose, right? Next.
Rational for PGO.
Yes, I'll come to that. Similarly is there for PG also. Read notification 12/17, read entry 12, read entry 13, read entry 14. Where specifically they have given that if that student or if that resident is staying more than 90 days and if the consideration is less than 20,000 per month, I think you are not liable for GST. That exemption is given for hostels. So, and for the previous period, the judgment is prospective. Now what to do for the previous period? So previous period they brought as is basis. So for the previous period, if it is, if you are paid, you cannot take a refund, but if you are not paid, don't pay the taxes on hostels, right? This is what the amendment which has taken place in 2024. That is applicable for hostels, that is applicable for PG. That notification specifically has used the word hostels, PG and other buildings also, right? I think you can rely. Now the next issue what sir is having is, landowner is unregistered. I'll come to your point, sir. Landowner is unregistered, I am registered, right? I am the owner of that property. Should I pay RCM? Because I think all of you know that there is a RCM on the property, commercial property, whenever the landowner is unregistered and the recipient is registered. Whether on this hostel building also there is a reverse charge or not, because other than residential property there is a reverse charge. Now the issue is whether I should pay RCM or not. So I think this is a issue which I have, but personally I believe that once that building is classified as residential dwelling and that exemption is there for residential dwelling, I think you are not required to pay. RCM is my view on that, but there are different school of thoughts. Many of us are saying that yes, it is leviable because it is not a residential, because it is a commercial building which is given on rent to the students. So I think different people are having different views. But I still believe that it is a residential dwelling and accordingly RCM should not be applicable, especially when these educational institutions, charitable institutions are taking hostels on rent and giving to their students. I think you can try to test this judgment there. And there is one more judgment you can try to test. I think it can help you. Mother Superior judgment, which was issued into it. I have not referred here. You can try to rely on that also. I think that will also help out. Wherever it is for the educational purpose, economic purpose or charitable purpose, the benefit of exemption should be read as liberal and it should not be very strict, and based on that exemption benefit should be given. I think we can try to litigate on that aspect also. Right? Then I think this also, I think most of us would have faced while filing the return, we would have given somebody else GST, and instead of giving Mumbai, I would have given Delhi, or instead of giving Hooghly, I would have given Ballari. All these are possible. So even those mistakes also, the decision is saying you can still avail the credit even though there is wrong entry of data. You can just rely where it is possible. Then transitional credit, whether it is input tax credit or not, I think this decision is very clear now. This transitional credit, you will take the color of ITC and accordingly you are eligible for interest, but I think for penalty you can try to argue here that there should not be any penalty as such, because only the interest can be eligible. You can try to bring out for this transitional credit case wherever you are having, right? So I think this is what you can do that. Yeah, communications are already discussed. Condonation of delay, I think you can rely wherever there is a condonation of delay beyond 30 days or where your appeals are filed at a later point of time. There are various Calcutta decisions, West Bengal decision, Madhya Pradesh, wherever they are trying to say that treating the delay as procedural defect and try to file the appeal. So they have remanded the matter and appeal has been filed. So I think you can try out with this kind of decisions. And in few cases, they are not giving the refund of pre-deposits. The department is saying that you have filed the appeal, you would have paid 10% as pre-deposit, right? But department is saying no, already two years has crossed, you would have paid pre-deposit 3 years back, 4 years back. So time limit of 2 years is elapsed. So I think you can try to rely on the judgment saying that no time limit is applicable for pre-deposits, right? So that 2 years is not applicable, you would have paid 3 years back or 5 years back. You can rely on this judgment and say that you are still eligible for refund of pre-deposits. Patanjali, I think I'll not notice pay recovery, you can just say not liable, you can still claim the refund if you have already paid the taxes. So I think, yes, this is the last decision. Many instances it is happening that we have the time limit of 3 months, right, for filing the appeal. Simultaneously for filing the rectification application, against that order also we are having 3 months. So if you have filed the rectification application and if you have not filed the appeal, in few instances the department is, appeal bucket is rejecting that you are not filing the appeal within the time period of 3 months. So you can try to rely on that. The time limit which has gone for rectification and rectification order should be excluded for completing this 3 months for filing the appeal. I think we just rely, and there are few decisions where they said that time limit can be excluded. But I still advise please file the even appeal also within 3 months. And write in that facts and grounds saying that we are filed a rectification application, we are awaiting for that, but due to time limitation of 3 months, we are filing the appeal and we have made the pre-deposit under protest. If the rectification order is reversed, to that extent amount should be refunded. Don't miss to file the appeal within 3 months, but wherever you have missed out, you can try to rely and exclude the rectification period. Right? So I will not, because of this time limitation, I will just go into year end and I will just tell you in brief about this gesture. You can just rely on this, what I can say, material which required. Year-end reconciliations, very important because by March I think we have to close many things. Not only with March returns, I think we have to try to see what best we can do for this type of reconciliation for our clients. One is try to reconcile books, GST 1, 3B, e-way bill and other outward reconciliation. Don't forget to do e-way bill reconciliation also, right? So not only your 1, 3B, e-way bill, you will get a summary in the portal itself. You can just try to download those statements and try to reconcile with your books. That is what we are trying to do with. So that they can save interest, they can take the credit and there will be less litigations and the books will be clean and compliant to that extent. Try to balance your electronic credit ledger with your books ledger. Right? Because every month whatever is available in 2B, only to that extent we are able to take the credit. So there is a possibility that your supplier would have uploaded at the later month of time. You would have accounted in the earlier month of time, right? So there is a possibility of difference point of time. So try to reconcile your GST 2B books with electronic credit ledger. Next is try to see whether the payments are made within 180 days try to recompute your rule 42, 43. Many times you miss that monthly computation of reversing common credit, all that, because at the end we finalize our expenses. So don't forget to do this reversal of rule 42, rule 43, which is pertaining to common credit of taxable supply and exempted supply. And very important is, portal is not waiting for you to issue the show cause notice. Portal will automatically issue the notice whenever there is a difference between GST 1 and 3B. Yes? So automatically, if there is a difference in 2B and 3B also, notices are given. Recovery is also there in GST 1B. So be careful. Till March, try to reconcile your 1 and 3B so that we can avoid such type of notices under 88C and 88D. Next important is jobber. We miss this. Because whatever the goods have gone for jobber, whether those goods have come back within 1 year or not, please check it. And don't forget to file ITC4. ITC4, if it is above 5 crore, please file once in a year. Twice in a year. And if it is below 5 crore, file once in a year, right? By April 25th or by October 25th. So please don't miss that. I think many of us are not complying this, but we have to comply this because there are some notices we are receiving with penalties and late fees. So don't forget on that. Then ISD implementations, whatever we have discussed. Sorry, DRC 3A, please look into that. And bank details update. I think somebody was telling me, madam, our bank details, we are not getting the refund in that. Please check your bank details. If you have closed that bank account, try to update the new bank account details, other authentication, authorized signatory. I think in last 7-8 years, I have seen many of the orders are received by an authorized signatory. Where we have given the reference of some tax practitioners, or we would have given the reference of some chartered accountant or an ex-employee, right? So just check whether that authorized signatory is updated in the portal or not. Don't forget that. And try to do the litigation review. In last 1 year, how many notices have come? How many replies we have given? How many orders have come? How much appeal has gone? Please try to make a list of those litigation review for your taxpayer, so that will be helpful. And QRMP, if anybody want to opt, they can opt it. For GTA services, please try to make an application. Whether you want to go for forward charge or reverse charge, only this is the time where you have to go for that. So I think you should look into those things also. And reconcile jobber. GST 2 is very important, 2.0. September 22, I think a transformation has happened in the rate of taxes, especially in the case of goods or services. Try to reconcile the stock as on that date. Try to see that whether it has been, wherever it is exempted, you have reversed it. Wherever your product is reduced rate of tax, whether you have availed the credit, whether inverted duty structure refund is there or whether excess. I think that reconciliation is very much important, especially in this year, 25-26, very, very important. Please don't forget to look into those differences. Review of all your credit notes, debit notes, whatever you have issued in the year, and whether the recipient has reversed the credit or not. Please don't forget to read discount circular 251. Yes, one more important is, just try to see compensation cess ITC also, because especially motor vehicle industry, I think you have to check that balance, especially in the case of 22nd September, as well as for tobacco, you have to check on 1st February 2026.